August is only days away, and this month, 5 distinct financial circumstances will end up taking money from Americans. Some through approaching deadlines that are already narrowing, some through newly introduced fees appearing right at the register, and some through withdrawals leaving your account on autopilot, regardless of whether you happen to be paying attention. Today, I am covering all 5 ranked by urgency, opening with the situation demanding your attention right now. My name is Scarlett. I practice as a licensed estate attorney, and before we begin, the Social Security Survival Guide contains every regulation I discuss on this channel compiled into one 44-page, straightforward reference document. Genuine 2026 data, every relevant form and figure. Link sitting in the description below. Now let us move into your August financial checklist. Check 1, the IRS penalty refund request you are still able to submit. This represents the single most time-sensitive matter in this entire video. A federal court decision titled Kwong versus United States, handed down in November 2025, concluded that the IRS had wrongfully applied failure to file penalties, failure to pay penalties, and underpayment interest charges throughout the COVID-19 federal disaster window, which extended from January 20th, 2020 through July 10th, 2023. The court determined that under the tax code section governing federal disaster declarations, every tax filing and payment deadline falling within that window should have been suspended automatically, meaning the penalties and interest charges the IRS collected during that period may have been applied incorrectly. The National Taxpayer Advocate released an urgent public announcement indicating that tens of millions of taxpayers could be owed refunds or cancellations of those charges, yet that relief will not come on its own. Submitting a claim is something you must do personally. The original cutoff date was July 10th, 2026. If that date passed without action from you, do not conclude the opportunity is gone. Submit your claim without delay. The statute of limitations consideration benefits those who file nearest the cutoff, and submitting after the deadline can still protect your entitlement if the appeal ultimately resolves in taxpayers' favor. The document required is IRS Form 843, Claim for Refund and Request for Abatement. Downloading it costs nothing at irs.gov. Write Protective Refund Claim, pursuant to Kwong versus United States along the top portion. Submit it separately for every tax year during which you paid penalties or interest tied to obligations due between January 20th, 2020 and July 10th, 2023. Send via certified mail directed to the IRS Service Center handling your filing region. 3 things warrant your understanding. First, the Kwong ruling is currently under appeal. Receiving a refund is not a certainty. What submitting the form accomplishes is locking in your eligibility should the legal outcome ultimately favor taxpayers. Second, this applies whenever you paid IRS penalties or interest charges, not only when you carried an outstanding tax balance. If you submitted your return on time and settled your tax bill but received a separate penalty assessment, that specific penalty may still be eligible. Third, H&R Block is currently assisting clients in putting these claims together. Completing and submitting it yourself remains fully possible. Act on this during the current week. Every additional week you delay adds further waiting time if the ruling ultimately lands in your favor. Check 2, the credit card surcharge now being applied to your purchases. The added cost appearing at registers throughout this summer that the vast majority of shoppers have no idea they are now being legally assessed. Credit card surcharges, meaning supplemental fees tacked onto your transaction when paying with a credit card, became legal in 48 states as of 2026, and businesses are implementing them at an accelerating pace. More than 60% of small and mid-sized businesses currently apply some version of a surcharge or dual pricing structure, fueled by steadily climbing credit card processing expenses. The surcharge may legally climb as high as 3% of your purchase total under Visa guidelines and 4% under MasterCard guidelines. A $200 grocery transaction charged to a credit card can now include a $4 to $6 additional fee. A $150 dinner tab can tack on another $3 to $6. Merchants are required to disclose these charges prior to transaction completion through posted signage at the entrance, a notice on the payment terminal screen, or a line item on your receipt. However, required disclosure does not mean you were informed before ever walking through the door. The approach for sidestepping these added fees is simple. Use a debit card or pay with cash. Surcharges on debit card transactions remain prohibited across all 50 states under existing federal law. Any merchant applying a surcharge to a debit card payment is operating outside legal boundaries. States continuing to prohibit credit card surcharges entirely include Connecticut, Massachusetts, and Maine. If you reside in one of those states and notice a surcharge appearing on your receipt, disputing that charge is well within your rights. Check 3. The mid-year tax review. The IRS never prompts you to conduct. August represents the halfway point of the second portion of the tax year, making this precisely the right window to confirm you have contributed adequately toward your estimated tax obligation. The IRS mandates quarterly estimated payments whenever you anticipate owing $1,000 or more, beyond amounts already withheld from income sources. Falling short on payments results in an underpayment penalty. The IRS currently calculates at 8% on an annualized basis against the deficient amount. The particular scenario tripping up many seniors throughout 2026 centers on the newly introduced $6,000 senior deduction established through the recently passed major tax legislation. Many qualifying seniors, along with numerous tax professionals, have not yet adjusted their estimated payment calculations to incorporate this new deduction, which can meaningfully reduce taxable income for individuals age 65 and above. If your quarterly estimated payments have been calculated using prior year earnings and outdated tax provisions, your current payment amounts may be running either above or below what 2026 actually calls for. Third quarter estimated taxes carry a September 15th due date. If you have not yet confirmed that your accumulated estimated payments align with your anticipated 2026 total tax obligation, factoring in the new senior deduction where applicable, September 15th represents your upcoming window to address any payment gap before it multiplies into a steeper penalty when the year concludes. Run those numbers today. Avoid waiting until April to face a penalty that careful August arithmetic would have headed off entirely. Check for the insurance premium modification withdrawing from your account. For individuals carrying Medicare Advantage, Medigap, or a private supplemental health coverage plan, August has the potential to deliver a premium adjustment that arrives without a straightforward accompanying explanation. Carriers and pension administrators perform mid-year operational reviews, and certain plans begin implementing modified premium deduction amounts in August. These may reflect a billing cycle realignment or a mid-year rate revision buried within documentation most enrollees did not closely examine upon its spring arrival. The practical action step this month involves pulling up your bank records or reviewing the deduction line appearing on your Social Security statement and placing the August figure alongside July's. If that amount shifted in either direction, contact your insurance provider directly and inquire specifically about what triggered the change and whether it represents an ongoing rate adjustment or a single catch-up collection. Single catch-up withdrawals occur when a billing schedule shift results in 2 consecutive months of premiums being pulled within the same calendar month. A genuine rate increase is an entirely separate matter and justifies asking whether it stems from a plan modification you previously consented to. Understanding precisely what you are being charged and the reason behind it is something you are fully entitled to. Check 5. The SSI payment schedule adjustment you absolutely need to understand. August 2026 creates a specific calendar arrangement that hits SSI recipients directly and manages to catch many individuals completely unprepared each time it occurs. As addressed in the opening portion of this channel's August payments video, your standard August SSI payment will land on August 1st, following its usual pattern. However, your September SSI payment will arrive ahead of schedule on August 29th because September 1st falls in close proximity to a holiday weekend, and the SSA is legally obligated to release payment on the final business day preceding that weekend. 2 separate SSI deposits will post during August. Not a single one will arrive during September. If you draw down both August deposits throughout that month under the impression you received a bonus payment, your account will sit empty in September, precisely when your recurring financial obligations come due. The step August SSI recipients need to take is this: when that second payment posts on August 29th, leave it completely untouched. Hold off on accessing those funds until September 1st. Approach it identically to how you would handle your September payment arriving on its expected date, because in every meaningful sense, that is exactly what it represents. Your complete August financial checklist includes filing IRS Form 843 right away if you paid any federal penalties or interest connected to tax obligations due between January 20th, 2020 and July 10th, 2023. Write protective refund claim pursuant to Kwong versus United States at the top and send it via certified mail. Recognize that credit card surcharges are now legally permitted and actively applied across 48 states, and switching to debit or cash payments removes them from your transactions entirely. Confirm your accumulated estimated tax payments match your projected 2026 tax liability, incorporating the new $6,000 senior deduction if you have reached age 65, well ahead of the September 15th third quarter deadline. Compare your August insurance premium deduction to July's figure and reach out to your provider if any discrepancy appears. And for SSI recipients, preserve the August 29th deposit in full to serve as your September spending budget. I will see you in the next video.